You're watching Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: continued tensions over the global trade war wipe out 13 lakh crore rupees in investor wealth on Dalal Street. The Sensex and the Nifty end 3% lower despite a late recovery. All sectoral indices end in the red. It's a black Monday for global markets as stocks get hammered across Asia and Europe. Hong Kong records its biggest single-day loss since the 2008 financial crisis. South Korea halts trading temporarily. European stocks tank 6% as the EU weighs countermeasures to Trump's tariffs. Crude oil prices continue to plunge, losing 11% in a week. Precious metals like gold and silver also fall due to trade tensions, as do metals like copper. Sovereign bond prices rally, yields crash as investors hunt for safe havens.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
President Trump says he did not crash the market on purpose and cannot predict what will happen to stocks. Adds that sometimes you have to take medicine to fix something. Claims he's spoken to several world leaders who are dying to make a deal with the U.S. Wall Street starts to speak out against Trump's tariffs. Billionaire hedge fund manager Bill Ackman calls for a 90-day pause on tariffs, warns that the U.S. is heading towards a self-inflicted economic nuclear winter. Lifelong Republican Stan Druckenmiller says he does not support tariffs exceeding 10%. Commerce Minister Piyush Goyal is likely to meet with exporters to discuss the impact of Trump's tariffs. Government sources promise to safeguard the interests of agri and dairy industries. Mkts Secretary says electronic manufacturers are not overly concerned as India is in a better position compared to China and Vietnam. The government hikes excise duty on petrol and diesel by 2 rupees. Oil Minister Puri says oil marketing companies will bear the burden. The government also hikes the price of LPG cylinders by 50 rupees from tomorrow. Funds will be used to compensate OMCs for losses stemming from LPG subsidy dues. RBI's Monetary Policy Committee begins its 3-day rate-setting meeting amidst the market turmoil. CNBC-TV18 Citizens MPC votes unanimously for a 25 basis point rate cut. A majority expects 3 rate cuts this year. DPAM Secretary Arunish Chawla says strategic disinvestment in 5 companies in the pipeline. This includes a much-anticipated stake sale in LIC. That's an exclusive. The government is learned to be gearing up for a major revamp of the insolvency and bankruptcy code. Sources say the finance ministry is to likely float a cabinet note in 2 weeks proposing amendments that will include giving financial creditors more power. A fresh twist in the fight between the Lodha brothers. Younger brother Abhinandan Lodha files a police complaint alleging conspiracy after Abhishek Lodha's Macrotech accused his company of forgery. The complaint has been filed against unscrupulous persons and not against Abhishek Lodha or Macrotech developers. Well, let's start with what was a black Monday for stocks across the world. The Sensex and the Nifty tumbled 3% despite a late recovery. They came off their intraday lows, but nevertheless, the Sensex lost over 2,200 points. The Nifty down 740 points, an 1,800-point cut on the mid-cap index and 1,600 points gone on the Nifty Bank. 13 lakh crore rupees of investor wealth being wiped out, and there was simply no place to hide today. Every sectoral index, look at the metals, down 7%, realty down 6%, auto down 4%, private banking down 4%, 3% cut there on the PSU banks. So Nifty Bank down by about 3%. Every index closing in the red. 49 out of the 50 Nifty stocks end into the red, with HUL being the only exception. Prashant is standing by now to wrap up the market action for us. A tough start to this trading week, Prashant, and it doesn't look like it's going to get any easier.
You know, markets are bleeding, and it looks like we are taking our medicine as prescribed by President Trump. Bitter, but necessary if you were to go by what he said. Well, let's start with where we are now as compared to the lows we saw on the 3rd of March. Nifty actually broke below the March lows intraday. It ended above it. The Nifty Bank is just about 5% away. Mid-caps are about 5%. The small-cap index is about 6% away as far as revisiting those March lows are concerned. Let's zoom out a little bit and ask how far we have fallen from the highs. Nifty remains about 15.5% off the highs. Nifty Bank is about 8% off. Mid-caps are down 20. The small-cap index is down a sharp 23%. Just a quick look at today's swoon and the biggest movers today. I mean, the losses include lots of Tata Group names. Trent, Vocard, Cartrade, First Cry, Blue Jet, Time Technoplast. I mean, these were some of the biggest volume-led losses that you had. And, you know, a lot of retail and institutional interest here in many of these names. On the upside, we had some green in stocks like delivery, which has actually been a huge underperformer since listing. GMR Airports and a wealth manager like 361 were also high, but very selective buying in otherwise completely risk-off red tape. This pain isn't just local. Actually, the pain is coming from global markets and US markets specifically. Now, if you remember our conversation with Gavakil's Louis Gavakil just about 1 month ago, he'd said that Trump had basically three aims: lower borrowing cost, lower the dollar, and lower oil prices as well. Well, it looks like they've had some success with these three aims. Since Trump took office, I looked at change from the 20th of Jan when he actually swore into his second term. The US 10-year yield is down 63 basis points, dollar index is down 6%, and oil prices have slipped about 18% as well. Well, markets should be happy, right? Well, obviously not. And the reason is the way all these three things have been achieved. The bigger than expected tariffs have crashed US markets, equity markets that is. So S&P is down about 15% since Trump took over, while the Nasdaq is down 20% from the 20th of January. Markets, of course, are pricing in the huge amount of uncertainty out there now. The big question, of course, remains this: will Trump offer, an off-ramp to key trading partners, or are we headed into a full-blown trade reset? We don't know this, and I think this is the single most important question which will determine whether we pull back from the brink or we go full steam ahead. Markets are now hypersensitive, will remain hypersensitive to any headline which signals de-escalation, and a single headline can swing sentiment. Back home, of course, all eyes now turn to the RBI policy on Wednesday, both in terms of what they do and the commentary will be equally important. Will the central bank provide confidence to the Indian economy as we continue to navigate these very turbulent times?
Well, that was the story in India. Thanks very much, Prashant. From Asia to Europe, the market meltdown is worsened. European markets opened with deep cuts. All major indices opening in the red. Defence stocks set for what could be their largest single-day drop since April of 2020. Yields on euro area short-term government bonds plunging today after hitting a 2.5-year low on Friday. Frontline indices across Asia extended their sell-off. Hong Kong led losses in the region, with the Hang Seng suffering its biggest single-day loss since 1997. JP Ong joins us now to give us an insight into the Asian market rout and what is expected from here on.
There was nowhere to hide for investors across Asia as the sell-off deepened across regional markets. Apart from worries around the Trump administration's sweeping tariffs, China's decision to retaliate against the U.S. intensifies the trade war between the world's two largest economies and raises headwinds for the Asian nations caught in the middle. Mainland equities mostly pulled back, while the Hang Seng suffered its biggest one-day loss since 1997, with tech stocks and banks among the biggest laggards in Shanghai and Hong Kong. And not even a circuit breaker could arrest the slump in Tokyo, with the Nikkei 225 now falling into bear market territory. And the Nikkei wasn't the only market in Asia calling for a circuit breaker. South Korean markets called for sidecar measures after Kospi futures fell by more than 5%, but that did little to halt the Seoul benchmark's tumble. And even though the TAIEX called for its own circuit breaker today, the Taipei benchmark saw its biggest one-day loss on record. Finally, a busy day for major Asian currencies as well. The yen went from strength to strength as the flight to safe havens favored the Japanese currency. And the Australian dollar briefly fell below 60 cents to the greenback for the first time in over 20 years. For CNBC International, I'm JP Ong.
JP Ong, many thanks. From equities to commodities, crude oil prices continue to plunge, losing 11% in a week. Precious metals like gold, silver, copper have also fallen due to trade tensions. Manisha standing by to take us through that. Manisha, big fall.
It's a sharp decline across asset classes, pure panic sentiment really when you look at commodities especially, and the kind of sell-off that we have seen for some of them actually have taken them into a bear market right now, especially for the crude oil prices, which has been the sharpest hit. If you look at the 4 or 5 trading sessions, crude has been falling anywhere between 4 to 7% on a daily basis. It's down 3 to 4% currently. It fell 7% on Friday. On a weekly basis, it's down by 12% as well. And if you look at the last 4 trading sessions, crude is down almost 18 to 20% right now. This actually is going to be a third straight year of decline in crude oil prices, but the last few sessions clearly have done it for the crude prices. This is a chart that tells you on how much the commodity prices have declined from their 2025 highs. So the crude prices, clearly the most hit, is down by 35% from the high in 2025. Copper is another one important. We see it as an economic barometer for the markets, and that is down by almost 20%. 20% as well. Silver prices have declined 13%, and the least of declines clearly seen in the safe haven gold. While the set-off in other commodities and the sell-off, that impact has come on in gold prices, but we are down just about 4% on that. The last week is where much of this decline really came in from. So when you look at the crude oil prices, we are down 17% in the last week, 15% down for copper, 12% down for silver, and within this time, gold has declined just about 3%. And it's not just about these major 4 or 5 commodities. This rout clearly is across the sector. Aluminum, zinc down between 7 to 8%. Industrial commodities like rubber, which is used in tires and various other industrial applications, has seen a decline of 15%. Cotton, because of the textile decline that the markets are looking at, is down 6.5% as well. And that pretty much has been the case with various other agriculture commodities. Just last one word on crypto as well, because as we see a sell-off in various asset classes, crypto hasn't been untouched as well. So Bitcoin is down 8% in the last 1 week, and Ether down 18%. This is where the major market capital comes in from. So decline across board, and the markets do believe that we haven't seen perhaps the bottom yet. Another 5 to 7 to 8% of a decline from these current levels is what most analysts are expecting.
Manisha, many thanks. And President Trump has said that he didn't crash the market on purpose and cannot predict what will happen to stocks. Speaking to reporters, Trump maintained that tariffs will not push inflation higher in the U.S. He also claimed that several world leaders who've spoken to him are dying to make a deal. Take a look.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world. I think your question is so stupid. I mean, I think it's I don't want anything to go down. But sometimes you have to take medicine to fix something. I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that, because to me, a deficit is a loss. We're going to have surpluses, or we're at worst going to be breaking even.
President Trump and EU countries will seek to present a united front in the coming days against President Trump's tariffs. The bloc is likely to approve a first set of targeted countermeasures on top of the $28 billion of U.S. imports from dental floss to diamonds. Meanwhile, French President Emmanuel Macron and British Prime Minister Keir Starmer discussed concerns about the economic impact of the U.S. tariffs. Billionaire investor Bill Ackman believes the U.S. president is losing the confidence of business leaders around the globe due to his tariff policy. In a post on social media, he said America was heading towards a self-inflicted economic nuclear winter and low-income consumers will be severely affected. Remember, Ackman had endorsed President Trump during the elections. Billionaire Elon Musk publicly criticized White House trade advisor Peter Navarro over the Liberation Day tariffs. He said that a PhD from Harvard can result in a big ego. Meanwhile, Navarro downplayed any rift with Musk. He said that Musk sells cars and was simply protecting his own interests by opposing the tariffs. In a separate statement, Tesla CEO Musk said he had hoped for a zero-tariff zone between the U.S. and Europe in the near future. Take a look.
I hope that the United States and Europe can establish a very close partnership. We obviously are, there's an alliance already, but I'm hopeful that there can be a very close relationship with America and Europe. And I'm hopeful, for example, with the tariffs, that at the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America.
Well, that's Elon Musk there on tariffs. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned.